Hi, this is Chauke. If you're watching this, you are definitely at the right place. Please make sure that you subscribe to our YouTube channel by clicking that subscribe button on the bottom, and also make sure that you share this lesson with your friends. Encourage anyone who's doing accounting that you know to come and become a part of our community by subscribing to our YouTube channel. Remember that when you subscribe to our channel, you don't pay anything. It is free of charge. So kindly assist us to be able to reach more people by subscribing to our YouTube channel, and also making sure that you share our lessons with everyone that you know who's doing accounting. Now, in this morning's lesson, I'm going to be looking at what we call a general journal. And for us to understand what we are dealing with here, we need to firstly understand what is a general journal. Now, before I begin, I would like to remind you that remember we have, I think it's about 6 subsidiary journals, and the general journal is the seventh one, if I remember well. Remember, we have every journal or every book for each and every transaction that occurs on a daily basis in the business. And the first one that we have is what we know as the cash receipt journal. Remember, in the cash receipt journal, we are recording the sales made as well as the money received by the business. Okay. And in the cash payment journal, we are recording all the payments that were made by the business. And we then have what we call the debtors journal. Remember, in the debtors journal, we are recording the credit sales that were made by the business. In other words, we are only recording there whenever we have sold to our customers on credit. And then we also have what we call the creditors journal. Remember, in the creditors journal, we are recording all the credit purchases that we made by the business. And then from there, we would have what we call debtors allowance journal. Remember, in the debtors allowance journal, we're going to record all the returns that were made by our debtors. And sometimes if our debtors are saying that we have overcharged them, remember, we'll also record that in the debtors allowance journal. Okay. After that, we have what we call the creditors allowance journal. Creditors allowance journal, it is a journal whereby we are recording all the returns that were made by the business. If we bought something on credit and we return it to the suppliers, we are going to record it in the creditors allowance journal. Or if we feel like our suppliers have robbed us, maybe they have overcharged us, we will communicate with them by recording that information in the creditors allowance journal. And we also have what we call the salaries journal. Remember, in the salaries and wages journal, we are going to record all the payments that are related to our employees for paying them for the service that they offer to us. Okay. And also, salaries journal is one of the journals that I will also cover as time goes on. Is normally included in our junior exam as well as the general journal. So let's make sure that whenever you do your preparations, you keep that information in mind. Okay. And the other journal that we have is what we call the general journal. In a general journal, this is where we are recording transactions that cannot be recorded in the other subsidiary journals that I have mentioned. In other words, there is no specific book of specialization to record these journals. Like, for example, if you charge someone interest on overdue account, you won't have a journal for recording that beside recording in the general journal. Okay. If you decide to write off a debt, there is no specific journal where you are recording the written off process of that particular debt. So you can only record that in the general journal. I would like you to think about the general journal as a book where we are recording transactions that do not have anywhere else to be recorded in the other subsidiary journals. Okay. So with that out of the way, let's get into the lesson. So here we are given some information that we need to be able to use to record in our subsidiary journal, which is called the general journal. Here they're saying that the information for 2021 presented below is taken from the books of Javon Stores, the businesses owned by J. Mahlangu. Now, whenever you do anything in accounting, always try to get as much information as possible. You never know where it will work for you. Then they are saying that this is what we are required to do: record the transactions in the general journal for 2021 and close off the journals properly. So meaning that at the end of that journal, we need to make sure that we write our totals. And they're saying that we need to refer to the information that is given to us below. And they're saying that we need to also note that narrations are not required. Remember, when you talk about narrations, we are talking about explanations. Okay. And this is the provisional totals that have been given to us, meaning that are the provisional totals of the control accounts that we have. Remember, some of the transactions that we are recording in the general journal, they may have an impact on either the debtors control or creditors control, or both of them. So that's why they also give us the total of those control accounts, both on the debit and on the credit side. And remember, some transactions, like I said, they will have an impact on the debtors control or the creditors control, or both. But if they don't have any impact on them, we are not going to record them. Now let's check how is our answer sheet shaped like. Now if you look at our answer sheet here, in question 3, they've given us those provisional totals. They have entered them for us, so meaning that all we have to do is to start by recording from the transactions. We don't have to start by entering those totals because they've already been recorded for us. And then now we can go to our transaction and try to record what is happening. So here they're saying that a debtor G Molefe who owes us 2,000. Remember, this person, the relationship is that this person, it is a debtor and he or she owes us 2,400. And they're saying that this person was declared insolvent. If a person is declared insolvent, think about a broke person. This person does not have money to pay you. Okay, they've done their best to go and pay you. Maybe you've taken them to court, for example, to credit bureau and all those things, and all that they could recover from that particular debtor was a small amount of what they were owing you. Now here they're saying that his estate paid 40 cents in the rent, meaning that this person paid us 40 cents of each and every rent that he was owing us. And they're saying that this has been recorded in the books of the business. So remember, if a debtor pay us, we are going to record this part of the receipt. It will be recorded in the cash receipt journal. So if we have recorded in the cash receipt journal, it means that receipt part that we have made, we don't have to record it in the debtors in the general journal, because the receipt part has been already recorded in the cash receipt journal. But here's what we must try to remember: there must be an instruction that we must try to get from such a transaction. Here they're saying that the remainder must be written off as irrecoverable, meaning that we need to write off this person as a person whom we will not be able to get the money that he was owing us. Okay, so this is someone whom we are writing off because we are no longer going to get that money from him. Okay, and remember, this person was owing us 2,400, so he only managed to pay us 40% according to here. Okay, so remember, cent is out of 100, so it means that if he paid 40 cents, he could not be able to pay 60 cents. So the reason why I'm saying 60 cents is because if you try to calculate this, you can say that 100 minus 40, you'd be left with 60. So it means that he can pay 60% of what he's owing us. So if you say 2,400 multiply by 60 divided by 100, it is going to give you 1,440. So meaning that this person, this debtor G Molefe, will not be able to pay us 1,440. So we need to remember, how exactly are we going to record this in the books of the business? We know that this person that we are dealing with is a debtor who owes us, and whenever we write off someone in the books of the business, we call that person a bad debt. So in other words, the account that we are going to debit, it will be bad debt. So we would say debit bad debts, and then we are going to credit G Molefe. Remember, this person is a debtor, so it means that this affects debtors control. Remember, amount debited is 1,440, so it also credit 1,440. Now we need to check, does this have an impact on the debtors control? Does it increase it? Does it reduce it? Those are the things that you need to check. Okay, remember, your debtors control increases on the debit side and it decreases on the credit side. So we need to check. We are writing off someone, meaning that particular person no longer owes us. So what must we do? We must take that person out of the debtors control, because we are saying that the debtors account, which is G Molefe, would be credited. So meaning that we must minus that person here. So it would be 1,440 on the credit side of the task control, because we are writing off this person. Okay, now let's go to the second part of the transaction. Next, they are saying that transfer a debit balance of 2,280 account of M Maude from the debtors ledger to his account in the creditors ledger. M Maude, they are saying, is both a customer and a supplier to Javon stores. Now remember, the reason why we can have a situation like this is because sometimes we can have a particular person who is a customer to us, but at the same time, also us as a business, we are receiving some services or products from this particular customer. For example, let's say it's me, Mr. Chauke, running a cleaning company, right? I'm a supplier of the school, but at the same time, the school becomes my customer because they buy from me. You get my point? So this is normal for to have someone as a debtor and also as a creditor. I buy from the business buys from me. That's all. Okay, so now here they're saying that we need to transfer a debit balance of 280. In other words, M Maude's account in the debtors control has got a debit balance. So we know that when we do a transfer, if the balance is on the debit side, if we are trying to take out this person, we need to credit that particular account where there is a debit balance. So in this case, M Maude's account from the debtors control must be credited. Okay, so that's the first step that we need to check. So in other words, let me just confirm the surname. The surname is Naude, sorry. So meaning that we are going to credit N Naude. Okay, so we'd say credit N Naude. Remember this person, it is a debtor. Okay, now because this person is a debtor, also remember here folio means source of reference. So our source of reference for everything here will be general. So I'm not going to write that. Okay, so now remember we have credited the account of N Naude, who is a debtor. So the question is, what must we debit? Remember, if you look at this question, we are taking his debit balance and we are moving it from the debtors ledger to his account in the creditors ledger. So in other words, we have credited N Naude's account. Okay, so we need to debit N Naude's account, M Maude's account, but as a creditor, meaning that his creditors ledger will be credited because you have but his creditors account will be debited because you credited his account as a debtor, so you must debit his account as a credit. Okay, now when we do this, we are going to say debit M Naude, who is a creditor. Okay, so it means that in other words, we are saying debit creditors control, credit debtors control. Remember the amount is 280. Okay, so that 280 will come here. So what did we say? We said that we are going to debit his account as a creditor. So I'm going to go on the debit side here, which is here 208. Okay, and then I need to check, what did I say will happen to the debtors control? I said that we must credit and now this account who is a debtor. So it means that the debtors control account must be credited. Then double entry is affected. The creditors control account is debited while the debtors control account is credited. So therefore we have applied double entry, and that's how you are supposed to record this. Okay, it seems tricky, but it's really not that difficult. Now the next one here is in that the owner J Mahlangu took trading stock at a cost price of 1,200. Whenever an owner takes trading stock, remember they're saying that the transaction has not yet recorded, meaning that this transaction is not appearing in our journals. Remember they're saying that this person took, if the person takes, it means that whatever that they're taking leaves the premises of the business. So therefore, we need to think about what happens, which accounts are affected. Remember, this person did not buy this trading stock, he took it. So automatically, when he takes it, it is for personal use. Okay, and therefore when it's personal use, we are thinking about drawings, and we know that drawings increase on the debit side. Okay, so meaning that we have the account that is debited here, it is drawings, and the account that is credited, it is trading stock, because remember, trading stock, it is an asset, and it decreases on the credit side. There is a principle that is called debit. You debit expenses, you debit assets, and you also debit drawings. So it means that drawings here would be debited, as I said here. So you need to try and remember that particular transaction, or you can stick to the Allego that I always tell you about. Okay, so now here, what are we going to do? And always make sure that whenever there is a drawings that is made, make sure that that particular drawings is recorded at the cost price. Drawings and donations are always recorded at the cost price, and that is one of the reasons why, if you look at your exams, they will give you this particular information. They will give you that information in terms of, they will even give you that a markup. If they give you drawings or donations as a selling price, they will give you markup to know how to get that particular cost price. Okay, so be careful when you do such questions. So now here, remember, we need to record this. So we're going to say debit drawings, credit trading stock. Okay, so we'd say debit drawings, and then we credit trading stock. Okay, so please be careful when you do such transactions, and remember the amount, I think it's 1,200. Now we need to check, does this affect the debtors control? Yes or no? It does not affect the debtors control. It does not have the creditors control. So therefore, we don't touch those areas because the transaction does not affect them. Please avoid making the mistake of recording these things where they are not supposed to be recorded. Okay, and then from there, this is what we need to check. The next transaction says that the business received an amount of 35,000 from RSA Bank via EFT for a fixed deposit that matured on 31 December 2021. Very important. So a fixed deposit has matured, but we received 35,000 from the bank. Okay, and they're saying that included in the amount is interest on the fixed deposit of 3,300. Very important. Now they're saying that here's where the problem comes now. The total amount of 35,000 has been credited to the fixed deposit account. Okay, so now what they've done, remember our fixed deposit, the actual fixed deposit that we made is around 32,000. Okay, the interest that we have earned is 3,000. So what they've done, they have credited the account, the fixed deposit account, with the 35,000 instead of 32,000. So we need to think about what were they supposed to do. Okay, they were only supposed to credit the fixed deposit account with 32,000, not 35,000. So meaning that it is extra by 3,000. Okay, so now this is where we are using this transaction to correct that mistake. that was made. Okay, so they're saying that we need to correct the error. So what are we going to do? Remember, we need to reverse the impact of that 30,000. So when it's like this, we are going to debit fixed deposit and credit interest on fixed deposit. This is what they were supposed to do. So when we debit that fixed deposit, we are reversing the error, and then the moment we credit the interest on fixed deposit or interest income, we are doing the right thing. Remember, when there's an error, you firstly reverse and then you do the right thing. Okay, so what are we going to do? We are going to say debit fixed deposit, debit fixed deposit, and then we credit interest income. Okay, and then the amount is 3,000. Remember that 3,000. Now we need to check, does this transaction affect our debtors control and creditors control? It doesn't. So if it doesn't, we leave it. Okay, we don't go there to record, because remember, there's no impact on that. And then next we can go to the next transaction. The next transaction says that goods returned by GGT, a debtor, as per credit note 428, was incorrectly posted to the account of G Levy, who is a debtor. So here we made a mistake. And when we've made a mistake, remember I said if there is an error, the first thing that you do, you cancel out that error. Okay, so let's check who returned the goods. The goods were returned by GGate. Very important for us to know that. Okay, and they're saying that as per credit note for 280 was incorrectly posted to the account of G Levy, who is the debtor. So in other words, G Levy's account was decreased. It was the one that was credited. So when we correct that particular mistake, when we reverse that error, because they credited it, we must debit it to cancel the effect of that transaction. So we're going to say account debited G Levy, who is a debt. Okay, so the account debited is going to be, we're going to say debit G Levy, who is a debtor. Okay, and then we're going to credit G Getty, who is a debtor. So just an error of that happened in the list. Okay, and then the amount that we have here, according to here, the amount that we are given is 280. So we'll record that 280. Remember, every transaction has got to pass this side, okay, on account debited and on amount debited and amount credited, but not every transaction would be recorded here. Now let's check. We need to check. So remember this, because we are talking about the task already, the task control is affected. This is the debit side of the task control, and this is the credit side of the task control. So what must we do? G Levy's account must be debited. So we're going to have 280 on the debit side, and G Getty's account must be credited. He or she is a debt, and it must be credited. So that 280 will come here. Okay, so such transactions have a lot of marks. Make sure that you understand the procedure that we follow to correct such mistakes. Okay, and then next we have I think this will be the last transaction. They're saying that we charged interest of 6% per annum for 3 months. If you look at this is similar to the activities that we were doing in the classroom, but this is in the exam. So you need to make sure that, guys, you get such questions. You need to make sure that you capitalize on such transactions. So remember, they're saying that we charged interest of 6% per annum for 3 months to overdue account of M Smith, and this person owes the business 6,800. Very important for us to show this. Okay, so we charge the interest of 6% per annum for 3 months to the overdue account of M Smith, and they're saying that he owes the business 6,800. So we need to make sure that we charge this person as they have said. So the balance is 6,800. We're going to say 6,800 multiplied by 6/100. Okay, and then we're going to also multiply it by 3/12 because this person is overdue for only 3 months out of 1 year. So let's see, 6,800 multiplied by 6 divided by 100, and then multiply by 3 divided by 12. It is giving us 102 rand. So we have that 102 here. Now this is what we must try to remember. Okay, this is what we must try to remember. We are charging a person interest on overdue account. How does this affect our general? Now remember, M Smith to us is a debtor, so it means that when we charge him interest on overdue account, his debt will increase. So we'll say David M Smith, who is a debtor. Okay, and then we credit interest on overdue account. We credit interest on overdue account. Remember, interest on overdue account to us, it is an income. So very important for us to remember that. And then the amount that we got was 102. So that 102 will come here. Okay, why are we saying that interest on overdue is credited? This is because interest on overdue account, it is an income to the business. Remember the click principle: credit, liabilities, incomes, and also capital. So just try to remember that. It will make your life easy to know what to do when you deal with this information. Okay, so now we need to check. A person is charged interest on overdue, and their relationship with us is that they are a debtor to us. We need to think about this. Does this increase the debtor's control or not? It definitely does. So it means that we'd have to debit also the debtor's control. So it would come on the debit side here. So now guys, this is how simple the general is. It's not that complicated. You just need to make sure that you practice, you deal with your information as much as you can. You need to make sure that you familiarize yourself with this. And remember, 23 in the exam, it's a lot. It can change your life. So please make sure, guys, that you practice, you watch this lesson as much as you can. If you want to use this question to practice, you can definitely make sure that you get it from test papers. They have question papers and memorandums that you can use to also mark for yourself. So make sure that you subscribe to our YouTube channel, you share this lesson with your friends, and that you also contact us if maybe you want to have a personalized lesson. And our lessons are only starting from 350. And if you want to get in touch with me, you can contact me on 073 036 3208. All these details are available on the description of this video. Thank you so much for watching. May God bless you. Shalom.